Agenda. The mysteries of hedge funds. What is hedge fund? Basic strategy types. Comparison among three main strategy types. Workflow of three main strategy type hedge funds. Career path and exit choices. Challenges and new trends. The mysteries of hedge funds. Why are hedge funds unethical? Hedge funds are known to use aggressive investment strategies to produce returns, irrespective of the direction of the market. Others say that because hedge funds are not highly regulated, they engage in unethical practices or invest in assets that are harmful to the environment or society. Why are hedge fund managers so rich? Hedge fund managers become rich by making money on the profits of their assets. They charge a 2% performance fee and cut the generated gains, which amounts to about 20%. Due to the above, they only allow wealthy and affluent individuals to invest in hedge funds. Are hedge funds immoral? Most hedge funds are well run and do not engage in unethical or illegal behavior. However, with intense competition and large amounts of capital at stake, there are less than scrupulous hedge funds out there. Is the hedge fund industry dying? This general strategy of hedge funds, so defined, is clearly not dying out. Plenty of successful investment vehicles use hedging, arbitrage, and leverage. Plenty of successful fund managers are compensated based on performance, not on a fixed percentage of assets. What is hedge fund? What is a hedge fund in simple terms? A hedge fund is a type of actively managed fund that focuses on high-risk, high-return investments. Hedge funds invest very aggressively using leverage and shorting to try and increase their returns. What is hedge fund and how it works? A hedge fund is a pool of money contributed by investors and run by a fund manager whose goal is to maximize returns and eliminate risk. Regardless of the structure, the hedge fund is operated by a manager who invests the money into different assets to achieve the fund's goals. What is a hedge fund example? Some examples of hedge funds include names like Munoth Hedge Fund, Forefront Alternative Investment Trust, Quant First Alternative Investment Trust and IIFL Opportunities Fund. There are others such as Singlar India Opportunities Trust, Motilal Oswal's Offshore Hedge Fund and India Zen Fund. How does a hedge fund make money? Hedge fund makes money by charging a management fee and a performance fee. While these fees differ by fund, they typically run 2% and 20% of assets under management. This incentive fee motivates the fund to generate excess returns. These fees are generally used to pay employee bonuses and reward a hard-working staff. Basic strategy types. What are the 4 investment strategies? Here, we look at 4 common investing strategies that suit most investors. Take some notes. Strategy 1, Value Investing. Strategy 2, Growth Investing. Strategy 3, Momentum Investing. Strategy 4, Dollar Cost Averaging. Have your strategy? The bottom line. What are the major categories of hedge funds? Hedge fund strategies are generally classified among 4 major categories: global macro, directional, event-driven, and relative value, arbitrage. What is hedge fund and its type? Hedge mutual funds are a type of mutual fund that are set up as private investment limited partnerships. There are different types of hedge funds depending on the securities they invest in and the kind of strategies used to manage them. Comparison among 3 main strategy types. What is the main strategy of hedge fund? Because of this, hedge funds employ various strategies to try to generate active returns for their investors. Hedge fund strategies range from long/short equity to market neutral. Merger arbitrage is a kind of event-driven strategy, which can also involve distressed companies. What would you say are the 3 main differences between hedge funds and mutual funds? Mutual funds are regulated investment products offered to the public and available for daily trading. Hedge funds are private investments that are only available to accredited investors. Hedge funds are known for using higher risk investing strategies with the goal of achieving higher returns for their investors. What are the different types of hedge funds? Hedge fund strategies are generally classified among 4 major categories: global macro, directional, event-driven, and relative value, arbitrage. What are hedge fund strategies? Explain with example. In long/short hedge fund strategies, managers make what are known as pair trades to bet on 2 securities in the same industry. For example, if they expect Coke to perform better than Pepsi, they would go long Coke and short Pepsi. Workflow of 3 main strategy type hedge funds. What is the main strategy of hedge fund? Because of this, hedge funds employ various strategies to try to generate active returns for their investors. Hedge fund strategies range from long/short equity to market neutral. Merger arbitrage is a kind of event-driven strategy, which can also involve distressed companies. What are hedge fund strategies? Explain with example. In long/short hedge fund strategies, managers make what are known as pair trades to bet on two securities in the same industry. For example, if they expect Coke to perform better than Pepsi, they would go long Coke and short Pepsi. What are hedging strategies? Hedging is a risk management strategy employed to offset losses in investments by taking an opposite position in a related asset. The reduction in risk provided by hedging also typically results in a reduction in potential profits. Hedging strategies typically involve derivatives, such as options and futures contracts. What would you say are the three main differences between hedge funds and mutual funds? Mutual funds are regulated investment products offered to the public and available for daily trading. Hedge funds are private investments that are only available to accredited investors. Hedge funds are known for using higher risk investing strategies with the goal of achieving higher returns for their investors. Career path and exit choices. Is hedge fund a good career? Many people are drawn to the hedge fund career path because of the money. Even junior-level employees can earn $500,000 up to $1 million, and senior-level portfolio managers can go well beyond that. What are the positions in a hedge fund? The hedge fund job positions generally include being a junior trader, strategist, analyst, quantitative, software developer, risk manager, and various administrative roles. How do you become a PM at a hedge fund? The four most common paths to PM include: perform well over 5-10 plus years and get promoted internally, possible at MM funds, less likely at many SM funds. Switch jobs and move to a smaller/startup fund or one that is expanding and willing to take a chance on promoting you. What skills are hedge funds looking for? The skills that hedge funds look for in job candidates can be divided into two basic categories: knowledge-based skills, gained through education, self-study, and work experience, and personal skills in areas like communication, teamwork, and risk-taking. Challenges and new trends. What is hedge fund trend? 2021 and beyond, hedge fund industry trends. Despite a negative public perception, hedge funds managed to record impressive performance, although the allocation was reduced from approximately 40% in 2018 to only 23% in 2020. Being actively managed, hedge funds might perform better than expected in the following years. What are the key issues that you think hedge fund must face? This report outlines the reasons why funds of hedge funds have been successful and details 4 key issues investors should investigate before investing in a fund of hedge funds: team experience, investment process, risk management, and transparency. Is the hedge fund industry dying? This general strategy of hedge funds, so defined, is clearly not dying out. Plenty of successful investment vehicles use hedging, arbitrage, and leverage. Plenty of successful fund managers are compensated based on performance, not on a fixed percentage of assets. How many new hedge funds are there? In the first quarter of 2021, 189 new hedge funds were launched, the highest number since the end of 2017, according